everyone, and we have really exciting topic today. Lots of fun things to get through. And um, I'm Evan, and I'm the COO of Better Bookkeeping. Um, Mitchell, you want to intro yourself and we can get started?
Yeah, I'm Mitchell Baldridge, CPA, certified financial planner. I CEO of Better Bookkeeping, and we built this business to help entrepreneurs, solopreneurs, keep better books and save more tax and have a better plan as you get to April 1st. So excited to tell you kind of more about how we think about this and more about how we've built a system to help folks. You know, save stress and save thousands.
So, Mitchell's
Um,
favorite caveat.
yeah, you always have to start with the unfortunate uh disclaimer. So, a lot of this may sound like financial advice. It may smell like financial advice or seem like financial advice. It is very much not financial advice. It is explicitly not financial advice. Yeah, I am a CPA. I am a certified financial planner, but I'm not your CPA unless I am. And even then, email me. But so we're doing our best to provide general information to help folks organize their lives better, but don't make investment or financial decisions around this without getting a clear outline of your situation.
All right, let's jump right in.
All right. So, Evan, take it away.
So, we are sitting. So, one of we're sitting here talking about the top five. There's probably four that make sense for you or seven that we need to go through, as you start to dig in a little bit more. But we're really going to focus on some of the high level levers here, and really looking at this as a solopreneur focused conversation. So what does that mean to begin with? It's making sure that we're structuring your business the right way to begin, just get started. And we get a lot of those questions. We always say the first question we always get is, should I have an LLC? What kind of business unit should I have? How should I structure everything? Um, if you follow Mitchell on Twitter, he's always talking about how having a small business is the best tax deal in America. And it is, but you just have to make sure that you're structuring it the right way, and that you're using the levers that are there for you in the right way. So we are big believers in S corps over here. We love an S corp. I always say we're like the Oprah of S corps at Better Bookkeeping. I would say, 85-90% of our clients have one in their portfolio. And I say that because not every business should be an S corp. But if you do have a small business that you own and you own it outright, more times than not, we will recommend you take this election.
So yeah, we're bumping up against this April 15th deadline. And we had a webinar in November, and it was kind of like the five things you should know in November that you're going to be crying about in February. And here we are in April, and there's a lot of things that you still might be able to do relative to last year that we're talking about today. And then there's some things you just can't do anymore. And one thing you just can't do is if you didn't set up an LLC in 2024, you can't magically today go set up an LLC for 2024 and elect to be an S corp and do all this stuff. So I mean, we look at this for our clients, and as we onboard folks into better bookkeeping, we look at your situation in particular, but we find that a lot of the clients that use us and a lot of the people I speak to are these kind of like uh, consulting type businesses or management fee type businesses. Even if you run investments or run real estate, a lot of times these folks collect management fees, and the main operating business is this business that's ultimately fee driven and has a lot of business expenses, and then has these expenses that also used to exist in your personal life that you're now kind of hopefully pushing into the business to save taxes. And so yeah, it's not so we love it when the person comes in and they're just like, look, I've done nothing. I know nothing. I maybe set up this LLC last year, but I'm just completely unplanned because we always end up saving those folks a lot of money with some proper planning. And so like the most basic example of how you would be structured if you did nothing or if you just set up an LLC and made no elections is you would just be the sole proprietor, the sole prop out there. And so it would either be this disregarded LLC or just you, and you would file a Schedule C. And so, these fit for folks who are pre-revenue or very, very tiny and not planning to grow, or just folks that don't want to file any paperwork because the paperwork might be might cost you more than what you're wanting to deal with. And so we catch a lot of folks from this spot where they go, look, I did this for a little while, but now the revenue's getting out of control and the tax is becoming meaningful, and I know I can do more to save. And then that kind of like escalates into kind of the next phase is like, okay, now I have this tweet that I ran last week of, the number one question I get from new clients, should I start an LLC? And, of course, the answer is it depends. But the LLC, the limited liability company, is not this like magical thing that saves you tax. It doesn't mean that you can go on vacations to Disneyland and write them all off now if you post it on YouTube. It just means that you have this entity outside of you that can operate in this world. And an LLC can take a lot of different tax elections. So it could be a partnership or if there were more than one partner, or it can go into being a C corp, like its own standalone entity, or it can be an S corp, this subchapter S small business corporation. And so, we use these in a lot of different ways. And, there's LLPs and LPs and inks, and, every state has some different variety of how they set these up. And, if you live in California, you may want to set up a Wyoming LLC, but if you live in Wyoming, you probably don't want to set up a California LLC unless you do. And so you have to like you have 50 states that operate in 50 different kind of ways. And so that's why people talk about Delaware, Nevada, Texas, Florida, and setting up these LLCs in business friendly jurisdictions and thinking about it from that perspective. So, we we have a friend of the, we're not a friend of better bookkeeping is better legal, no relation, or there's Stripe Atlas, or there's your friendly neighborhood business attorney. There's a lot of ways to get LLCs set up, and a lot of ways you can get advice. And again, if you're going to operate a real business, the best part of this is it does offer some liability limitations so long as you run it right, but it does become the new Chia Pet. But if you're going to go run a real business, generally set up an LLC, set up a bank account in the LLC, put some money into it and get to work. Don't it's time to professionalize up a little bit, you know.
We get a question a lot of what state should we register our LLC in. I get that one quite a bit. And one thing to note is it doesn't, depending on what state you register in, you still have to pay taxes for the state that you live in. So now with the big tax states like New York and California, and we sometimes will suggest if you aren't planning on staying in those states, even if you live there to begin with, may not be the best option to put your LLC tied to that state forever and ever. So that's a good time to explore a Wyoming or or Delaware. You see a lot of Delaware C corps, but you have to still pay tax in whatever state you live in. There's also other tax implications for where you do business, but you can go in and create your LLC kind of wherever. and we're happy to talk more about pros and cons of the different locations, but um, I have gotten that. Well, if I register in Wyoming, then do I pay Wyoming tax? And we're no, that's where your business is registered, and you still have to pay your income tax to where if your state requires it, you still have to pay it.
Yep.
So our favorite S corp is the next layer. It's almost like a layer thing. So you started out as like a sole prop, then you kind of moved to this LLC. Now you're getting real serious because you've actually earned some money. And the S corp is where there is a PITA tax associated with it, which is my favorite term because it is. There's some pain in the ass stuff you got to do with the S corp, including filing a separate tax return. But this is where the tax savings really start to make sense.
Yeah, and I'm the like return on hassle guy, so I'm always saying, don't do this if there's not enough return on it. But ultimately, there's nothing magical about the S corp. There's definitely some downsides of you have a new tax return now. You have to pay file, some payroll. You probably don't want to put assets in the S corp because they can get kind of stuck there, and you could have to pay built-in gains tax trying to get them out. But let's talk about the pros. For the right business and for the right person, it can help, save you a lot of tax at scale. It can save you on the front end because you get to run this thing where, now I've set up this LLC, I've set up this S corporation, and now I have this pass-through entity that I own. And now if you work in the business, now I'm an employee of this business. So I've always looked at it as this like McDonald's franchise model of I got a franchise. I built a building. I own a McDonald's now. I'm the proud owner, but I also run the drive-through and run the cash register. Like I need to pay myself a salary for the work I do in the business, but the overall uh, business profit no longer is subject to self-employment tax or net investment income tax, which is, self-employment tax is 15.3% of all the income you make, and then net investment income tax is another, or the additional Medicare tax, it's another, 3.8% of all the earnings. So who's this a good fit for? It's, people, I have this long form tweet I wrote that's a case study about someone named Heather, and Heather's a personal trainer. She makes $250,000 a year top line. And when she came to me, she was paying, $60,000 a year. She was paying all the FICA, all the FUTA, all the Medicaid, all the everything, all the way up to her entire net income. She was taking no expenses and she was completely unoptimized. So we set up a S corp for her and we set a salary of $75,000, which is the appropriate salary of the work she was doing. It's what she made at her last job. It's what she would hire to replace herself in the company. Like this was her situation. And so instead of paying 15.3% tax on $200,000, we now only had to pay the self-employment tax on the $75,000. And we found a bunch of expenses for her and some retirement planning and some other good opportunities that were great for her and her kind of solo business. The other person this is for is I have a physician client who makes $1 million a year, kind of out on his own. And we'll talk about qualified business income. He's a specialty service trade. He doesn't even get qualified business income, but he now sets his salary at 220, and the entire delta between the 220 and the $1 million is no longer subject to that 4% tax. So that saves him $30,000 a year. So there's not a straight path in which I can just tell you at the end of this call who you are and what you should do. There's not exactly like a clear linear path for every situation goes into this because there's all these variable factors that I kind of think through in this decision tree. But this is a great tool for folks who make just kind of like ordinary business consulting income, and it takes these folks from at the high end, at the highest tax bracket, paying 37% plus another 4% in some situations, all the way to paying about 29% tax. So it can be meaningful. Um, Chase asks, "Hey Chase, how are you? How do we coach a client through how much salary to take from their S corp?" And in that kind of example I just said, it's really just like, uh, what would you have to pay somebody to replace you? Well, in a one person business, you're never going to be replaceable because you're doing all these functions. But it's like, separate the ownership from the work in the business, the work on the business versus the work in the business, and what would you be paid to work in the business? And so a lot of times it can be tricky, but like in Heather's case, she had a job right before she went out on her own, and a lot of people work in this physio kind of personal trainer job at places. She was making $67,000, and then she just went and took her show on the road and started grossing 200. I was like, let's call it 75. So it's
Yeah.
somewhat art, somewhat science. The worst thing you can do is just pay nothing because it's hard. That's not true. You know what I mean? And the IRS is incentivized to have you pay at least all the way up to the Social Security tax limit of about $178,000. So sometimes you can just punch out there, you know?
Well, what we a lot of times are doing is when clients are QBI eligible, first and foremost, we're trying to maximize QBI. So,
Yeah,
and you had a lead in, we already had a slide for talking about how what salaries are and why you need to do them. But when when it comes to our client base, because like we have a client who was making 300 grand working at a marketing firm and now has his own marketing firm and he's not even making 300 grand in the business. So we're not
sure.
going to tell him to pay himself 300 grand. Even if that was what he was making, what we have done with him is said, hey, let's talk about what is the QBI optimized salary? What is it that you can make on $300,000? And then you can obviously look at the rest of the industry standards and make sure you're aligned accordingly. But we want it to be reasonable. We want to look at QBI optimization. Um, we talk in here about the withholding. So sometimes people want to just withhold their old paychecks or make sure they're withholding a lot in their salary in their W-2, using that as a way to get in front of quarterly taxes. And then also sometimes they want to, make sure that they know how much they're going to make because they want to do budgeting, or 401k. There's like a number of options here, but
Yeah.
bare minimum QBI is usually
Mhm.
a deciding factor for us.
I mean, like in a professional service firm, you would go, well, if I were to build my ideal professional service firm, 30% would go to profit, 30% would go to wages and salaries, and 40% would go to overhead. So I'm going to make my salary about 30% of gross revenue because I'm the only person in the business. Like there's a lot of ways to back into it. We're we're talking a lot about QBI. Let's talk about QBI real quick. Like one of these opportunities and why people set up S corps. S corps were already a good idea. I've been an accountant for, oh gosh, 15 years now, and we've always used them, and they've always had their role. But in 2017, the Tax Cuts Jobs Act came about, and this thing, the qualified business income deduction, came to be. Well, they lowered the corporate rate from 35% to 21%, and they wanted to throw a bone to small business. And so what they did to do that is said, hey, small business owners, you can have this qualified business income deduction if you meet XYZ, PDQ standards, which, were you're not an accountant, you're not an attorney, you're not a physician, you're not a famous movie actor, you're not one of these specialty service trade businesses where you trade on your likeness or your intellectual capital. You're a real business, so you're real estate, you're manufacturing, you're retail, you're kind of a of the earth business. And further, you you can only take this 20% deduction to 50% of the wages you pay out to employees. So if you start to run the algebra, it basically says that you need to pay about 28% of your net income before wages out as wages. And so what a lot of our S corp owners do is, let's take this solo consultant example and assume they're not a specialty service trade business, which they may be or may not be. If they were at 360 net, their QBI optimized salary would be 360 times, 0.28, or it would be 100 grand. Well, we're suggesting they pay 150,000 to themselves for reasons, probably because that's an appropriate salary relative to the $400,000. But even in this example, without the S corp, they're going to pay, $115,000 of income tax and self-employment taxes, where with the S corp, they're going to get the QBI optimization of 16.8. They're going to save a good chunk of self-employment taxes. And, in this example, they're going to save a chunk of money. And then the good news about doing this is like, our client Heather, like that was 10 years ago we set this lady up, and she's just running this thing, and she's saved $30,000 a year for 10 years. Like this is a real story. This is one of my first clients, and all we do is just keep saving money every year. And so, you know, um, all that being said, it's a good, from going completely optimized to very optimized. It's a big win, and it just gets better and better. So um, ultimately, these FAQs, do I need an LLC? Maybe. We'll drop you a link to my tweet of how to think about it. Who can set it up? Better Legal, Stripe Atlas, your friendly neighborhood attorney, LegalZoom, whoever, when should I take the S election? It's generally pretty flexible. Like you can go back 3 years and take the S election. So, and it's a pretty standard, pre-existing that they'll accept a late election. So
You need the
it,
LLC. So just keep that
yeah, yeah,
in. So
yeah. But you can't go back and do your S election as of January of 2024 today if you haven't set it up an LLC. And then what is the QBI deduction? Well, I just kind of went through that, but it's the sweet little deduction that the government started giving you um, to run a small business out there.
so sorry, I clicked the button a little early, but here we go. So point number
No
two.
worries. Yeah, so we're humming along. We're 24 minutes in on point number two. Throw us questions if you
The
have
big
any
one. That's like
questions.
the one that always takes the most time because that's the one
Okay,
that there's a
good.
lot of yeah.
Just
So
hit me with like a cattle prod if I don't stop talking, or someone like raise one of those fingers. No, so we're here talking about what are the things you can do to organize your life and save taxes in the middle of tax season. Getting your entity structured, you may be too late, but shoot, you're going to live a long time. So let's get that buttoned up for the next 10 years. And then number two is transform your books into a powerful tax savings tool. So ultimately, like people make a mistake that they like. A lot of clients come to us, especially the first year, and it's like June, and they're like, "Hey, can you catch me up for the last 18 months?" And I extended my returns, so let's just like hammer all this through, and let's get down to the number, and let's file the taxes, and let's move on. And it's a shame because really like you pay all the money and you deal with all the hassle, and you get almost like 20% of the benefit that you could get from your books if they were up to date and organized and available for your reference at any time of the day, any day of the week. I mean, your books just sit there, or you're paying money and you're trying to do all this stuff, and you're just getting no utility out of this whole apparatus that you still have to deal with just to stay out of jail. So, one of the things that we come in and say there has to be a better way. Well, ultimately, we've tried to build a system where people's books and their money management system and their business is a bit simplified. So we want to take care of all this for our clients, but even if you're not our client, here's our suggestion to you. Like, set up a business bank account. Just like we get these people coming in who are making millions of dollars a year who are like doing their, you know, kids' dentist visit and then their wife's nail salon and everything out of one bank account, and it's just crazy. Like it doesn't need to be done. It doesn't really help you. It's like just have two cards. Have the card that you spend when you go buy groceries, and have the card that you spend when you go to lunch with a colleague. And so, like, I have a joke tweet of like, 95% of business accounting is just using the right credit card at your dog's vet, at the vet appointment. And like, it's the truth. And then everyone goes, ha ha, well, what if my dog works for me? And you're just like, uh, come on, whatever. But ultimately, having your business be a business as an LLC, and then your business's financial activity be your business's financial activity will put you ahead of 90% of these small business owners who are really having money problems and don't know their numbers at all. And the other problem is like, even if you have let's say you have like amazing unit economics in your business, you have 80% margins and your business is growing and growing. The other thing about commingling is just people get lazy. I hear all the time from potential clients like, or even current clients, oh, I know I just forget to like spend all that stuff on the business card. So I have to go back and look through and try to figure out uh, what all my business expenses are, but it's probably not that much anyway. And it's like what we've done by having our clients you know, compartmentalize their personal lives from their business life is just like we see everything come through. We're able to calculate the business's P&L on a daily, weekly, monthly basis, and then we're able to project taxes forward a bunch. Like we're doing all these extension estimates right now, and I was talking with Evan this morning, and she was joking that a client was surprised, and I was like, well, why was he surprised? There should be no surprises. And she's like, he wasn't really surprised. He knew what his taxes were going to be. He just was mad. But like ultimately, my goal is no surprises because we have this system where we understand what tax is going to be the throughout the year, and so we're not just like doing this slapdash weird thing 18 months past when you could have had your books right in front of you up to date where you could make like real business decisions beyond just like, oh, I need to file some paperwork with the government so I don't go to prison, you know.
Yeah. And keep in mind, we do take the 18-month clients and we help get their lives right.
One
Um,
time, one time
Yeah,
only.
one time, it's a one-time deal, and we do it on the regular because the idea is that, you do your penance and then you're right as you move forward. And that does create, I know that they're not getting we just signed up a new client who didn't have an LLC in 24 and having to kind of figure all this stuff out. And I'm just kind of shaking my head going, man, if you just had done this using 5 different credit cards, personal, and there's no way we're going to get all of their business expenses in our system as much as we're going to try. We're going to try our darndest, and we can figure some of it out, but like we don't know. They're going to have to then go back in and pour through. Was that travel for business? Was that meal for business? And when it's all messy together, and then any of our clients that continue to make their lives messy, we're not going to necessarily give them as much of the benefit of the doubt. If you went to the grocery store and it's a business card, we would just put it in as, office expenses or supplies or something. But if you commingle and you go to the grocery store, we're just going to mark it as a personal expense. So we try to make sure that people are keeping their funds separate just so we can actually confirm what the charges are. And then a lot of times clients will go ahead and connect their personal cards to our system. And it's amazing how many you can just go through really quickly and say, hey, Canva, business expense, Slack, business expense, cell
Yep.
phone, business expense. And we do that cleanup on the other side of it where there's almost too much regulation or not changing things over. So we help get our clients' lives right, but we're going to always bang the drum and say, keep it separate, do the best you can, and that'll make things much more straightforward. It means our estimates for taxes are going to be much cleaner and more realistic.
Yeah. So best practices, set up a business checking, set up an LLC. Even if you don't have an LLC, if you're not there yet, set up a separate checking account just in your own name and put 5,000 bucks in it or whatever you got to do to start up the business. I always tell like clients, like, run your business like I'm your partner. Like, if you had to be accountable to me and you ran your business like this, I would be like, what the hell? Even if you own 100% of it, if you act like there's some real governance or that there's some real stakes to doing things the right way, I just never have like met a business owner that was upset that their books were clean and like said, "Oh, though that was just useless for me." So, open up a business checking account. Not being paid to say this, I use meow.com. It's a silly name, but I've really liked it. I've used Mercury, I've used Relay. Meow's been my favorite lately. They're really, really innovating. The best thing they do is they pay interest on your checking account balance. So it's like 3.8% or something. It's not like the highest rate you would get with treasury management, but it just happens. And they pay you 2% on what you spend, and it just happens. So like, I'm lazy and I have a lot going on. And so I like to just get 80% of the benefit with no work. That's my thing. That's what I do. But so ultimately, open a business checking account, get a business credit card, only use it for business expenses, maintain records, save receipts if you want to do that. And if you're too busy to do all this yourself, hire us, betterbookkeeping.com. And if you don't hire us, please hire somebody. Do it. You owe it to yourself. Chase is more scared of me than the IRS as his fake business partner. Good. Yeah. Key expenses to run through your business. This is always what exactly can I deduct? Employee costs, obviously, salaries, benefits, payroll taxes, contractor payments. We use Gusto. They're just the most kind of like with it 21st century organized service of all the operations expenses, all the stuff you think, you know, travel, business travel, and there's a lot of ways to try to think about taking business trips that are bona fide business trips and having a little bit of fun. Um, Meals, marketing, vehicles, equipment, training, health, retirement. Like a big one, yeah, is training or professional development, where, a lot of clients, a lot of people who are like high agency, going to go into business for yourself people, were doing continuing education back when they had their job, and then they get out on their own. And the good news is all that stuff that their employer wouldn't reimbursed that already existed in their life is now a bona fide business deductible expense. And same with office supplies and insurance and a bunch of this junk that already exists in your life that your employer wasn't reimbursing you for. So you take like I used to go to work and make money, and then I would pay tax, and then I would pay for my car. And now I go to work and I pay for my business use of my car and then I pay tax. And I've always had a car and now I just get to deduct a big part of it.
Another good one is if people go to conferences or things like that. Those are
Yeah.
another kind of good area to note. Just a reminder, we have a Q&A open in here if anyone has any questions as we're going through. I know we're answering all of your questions because it's so thorough, but just a quick reminder on that. All right, point three.
Optimize tax strategy all year round. And I kind of touched on this and like the idea of like getting your books right is just mostly to foundationalize this idea of, people come to me and they're like, "Hey, you talk about all this stuff on Twitter and my accountant's totally not proactive and my accountant's totally reactive and never has good ideas and never has any like great suggestions for me. But we'd love to sign up, but we'll just keep doing our own books in QuickBooks." And I'm like, well, it just kind of like doesn't work that way in the sense that if tax planning happens once a year, if all your or if tax planning never happens, or if your taxes are getting done in June of 2025 for 2024, or we had a client call this week where, you know, LA wildfires, so we're on hold for 23 and we're not even started with 24 and we're just still, it's just like you're selling yourself short because we have so many clients that come in and we go, okay, going forward, you're saving 30 grand a year because we did this, that, and the other. And they go, great. Well, how about, can we go amend my last three returns? And you're like, no, doesn't work that way. It only goes one direction. And so the idea that you get ahead of it, you organize the entity structure, then you organize the books. Now you have a data set that you can really start making decisions about and planning around. Before that, you just you can't really make proactive decisions or planning choices, right?
Yeah,
So,
I get the like I don't pay quarterly taxes a lot from people, a lot from clients are like, I just don't think I don't need to do it. And I'm like, I don't care if you pay them or not. That's fine. But just know what they are. Just understand
and
what that amount is and prepare for it so that when we're sending the emails, today's April 1st, we've been sending emails last week and this week of, hey, this is how much you need to pay by April 15th. Back to Mitchell's thing, no surprises. Like our clients should not be surprised of what their balances that are due because we've been talking about it all year. We know what those
and
numbers are.
And now, I mean, the IRS charges you 8% to
Yeah.
borrow money. Like you're supposed to pay your taxes as you go throughout the year, and there's a whole mechanism of how you do that. But like the IRS is charging you to borrow that money, and it's sitting in your savings account, earning a little bit of interest, or it's sitting in the stock market, and you're not really set up to go pay the money in 4 months if it's in the stock market. Um, yeah, and so ultimately, we've tried to build as much of a systems-driven kind of like um quantitative approach to how we go about tax planning. We try to work with clients who fall in kind of a similar, one of two or three avatars, and then we try to run the same plays at scale for these folks. And so ultimately, we try to get bookkeeping down to a system so that we are tax planning at scale for our whole client base rather than trying to keep all these plates spinning one by one for 1,000 customers. It just doesn't scale that way.
Yeah, and then one other, I guess, thing to note is we also want to be there before the change happens. I have a client who was like, "Oh, I'm gonna I bought a business," and I'm like, "Oh, well, what's the structure of the business?" They're already a client, they already have an S corp, and they're like, "Oh, well, we did it this way," and it's like, okay, well, let's talk about which way that is. What's going to make the most sense for you strategically from a tax savings perspective? There's the C corp route, there's a partnership route, there's a lot of different avenues, but let's make sure that we're on the same page. And luckily there weren't any major issues with how they went ahead about it. But I always say, like, let us know before. We'll be there. We will talk about it with you. We will get on the phone with you at any point throughout the year as life happens. You want to go buy a rental property for, for you to do a short-term rental. Cool. Let's talk about it. And that way we're there. We're not just talking to our clients once a year because we're trying to help plan throughout the year. Because we don't want to be behind the eight ball on any of it as well. And there are some tax saving implications with a lot of these things. Oh, reminder of all of your dates. So we talk about quarterly taxes and making sure that you're paying them without penalties. And so here are just some key dates we wanted to make sure. And note, we have a key tax deadline calendar that you can subscribe to. That way you just are in front of it and it's a great little reminder of when things are due. We harass all of our clients on a quarterly basis to make sure they know when all this stuff is happening. But if you don't have a harasser, here's a calendar for you to subscribe to. Um, we also talk a lot about, I guess, just talking a little bit more about quarterly tax payments, giving a little education around these, and just laying out some of the different options so you aren't penalized throughout the year. So I don't know, Mitchell, if you want to walk through these.
Yeah, so ultimately, as your business scales and grows, paying quarterly payments is pretty simple. And the way we talk to our clients about this is we just say, our younger clients, as they're growing and growing and growing, we say, here's your safe harbor payment. We actually know what your payments are going to be for next year as we wrap up this year's taxes. Because if you pay 110% of the prior year's taxes, it doesn't matter if you win the $1 billion Powerball in the middle of the year, like you're square until April 15th. So if my taxes for 2024 were $100,000, then I know I need to pay $110,000 quarterly between my W-2 withholdings and any other kind of withholdings that get made for me, and then any extension payment and any estimated payments or prior year carry forward. That just all has to equal out to 110% by January, and then I'm squared up. If a business fluctuates or goes up and down, one thing we can do is 90% of current year, which because we have your numbers, we can square up to that. Or we always just try to hit probably 100%, but then if we're off, if we're a little low on the margins, we catch 90. You don't want to make a like an interest-free loan to the IRS. You don't want to overpay your taxes, especially you can get 4% on your money risk-free. So like, why leave a bunch of capital that could work for your business and for you sitting in the IRS's coffers? And so the other thing we do is we annualize your income. So even if you're safe harboring, even if we say, hey, all you need to do is pay 110%, and here's how you're going to do it, and here's when these payments are going to get made. But by the way, you're actually going to owe another $200,000. So just so you know, by April 15th, based on the track you're on, you need to have 200K sitting in a checking account, and you need to be able to rip that check. And so, you know, by getting a little bit smart with our clients about how they can pay their taxes, if you can leave $200,000 sitting in a interest-bearing money market, I mean, you're making $600 a month doing that, So, and it's just like, again, the idea of like having this bedrock of good books leads to having an understanding of what your cash flows are going to look like vis-a-vis taxes versus just like covering your eyes and guessing until August of next year and paying interest, paying penalties, the whole deal.
Yeah, I mean, we had a client who, killed it in 23, just totally killed it. And we're like, okay, cool. Well, here's your safe harbor amount in Q1 of 24. And they paid it. And then we were like, hey, you're not really killing it so far. It's like they work in an industry that's fairly volatile. And so Q1 rolls around, they paid the safe harbor amount. Q2 comes around and we're like, okay, here's where we're annualizing you right now. Like, what are you thinking? And, we kind of pulled way back on Q2. And then by Q3, Q4, we were like, are you expecting something big in December? Because if not, let's go back to this 90%. Like just make sure you're covered in that world. And and frankly, we were actually doing more of real-time estimates for them and really looking how they were doing with annualized income with the information that was on our books. And they ended up having a much smaller year than they had had the year prior. And we made sure they didn't overpay on their taxes and then basically just give all this money to the IRS. We don't love carry forward. We'll take it. Um, but but then of course now 2025 back to killing it and now gets the safe harbor on a much smaller amount from 2024 because they made less money. So it's kind of it's a moving target in some cases. I mean, we do have some clients that are dentists who make the same amount every year come hell or high water, and it's pretty easy to know what they should be paying throughout the year. But there's just a lot of strategy here. We safe harbor Q1 pretty much for everybody because it's just an easier way of making sure that we know what's going to happen and that they're covered. But when you go back to the making sure that you're looking through out the year of how you're doing and keeping clean books throughout the year, these are some of the options you have with how you look at your quarterly estimates.
Yeah. And so, yeah, now utilizing retirement accounts for tax savings. This is the time of the year where people who haven't planned wake up and they go, "Oh no, I got to pay that much," and we can kind of buy some time and allow them to make IRA contribution later in the year or do some kind of tax mitigation strategies before the extended deadline so that we can bring their tax burden down. And you know, it it's still cash out the door, but you know, owning your own business gives you this huge opportunity to save and save in these ways, especially if you don't have employees other than yourself, in these really, really like Cadillac plan ways. So you can do Cadillac healthcare plans in the sense that your company can cover all the healthcare costs for you as a self-employed business owner. And same with retirement. Your business can go, look, we love this employee and we really need to retain this employee, so we pay them $100,000. Well, beyond that, we need to, they can pay the 401k max deferral for themselves, and then we're going to do a 25% contribution for them on the other side. So lots of and that scales all the way up to 66 or I guess $69,000 out there this year. And so that's there's no better way to get tons of money deferred into a 401k. I mean, we can have a whole conversation about how much you should defer into a 401k, which we talk about with our clients, because there's actually so much opportunity to defer money into 401ks that you get yourself in trouble pretty quick because you'll just have, if you're young especially, you'll just have a billion dollars in a 401k when you look up at the end of your life if you but you start saving 70 grand a year, and after 5 or 10 years you've like hit your 401k bucket. So the you know you start to think, what do I want to pay on taxes today? What do I want to defer? How do I want to do this? What kind of health savings plan do I want? And you just have lots of options based on how you structure yourself.
We talk about the 401k versus SEP IRA versus just even the market. And, a lot of it, one of the big questions we get about it is, okay, should I go and maximize my 401k? Should I do a SEP IRA? And it really always does depend on how old are you? How much cash do you have on hand? What are you wanting to do for, um, yes, it brings down your tax liability, but then you have to outlay cash. And is that a good time for you to do that? And then, you can always go and put it in the market and not have to tie up your money. So we don't have a firm line in the sand, like, yes, everyone has to have a 401k. I get that sometimes on phone calls where people are like, oh, my CPA said I have to have this. And it's like, You don't have to. It really just it depends on where you are in your life and how you want to spend your money, how much cash you want to tie up versus how much cash you want to have on hand. But there are ways and there's still time for a lot of these. So if you are still working on your 24 taxes and you still need to think about some ways to bring your liability down, talk to your CPA about doing a 401k or SEP. You still have some time.
Yeah.
Um, this is kind of answering some of these questions, but yeah, you need to make sure that you've gone in and you know set up some of your you have to set up your account before the end of the year. So if you haven't set up an account, for 2024, that's going to be the challenge. You have longer to fund the account. So if you are thinking about doing any of these 401k, SEP IRA, any of those, you want to make sure that it's done in the calendar year. And then you still have some time for funding those before the tax deadline. And also the SEP IRA, you can actually fund that until you file your return. So keep that in mind that there's still some options here. And you can always reach out and ask us some more questions if you have any retirement specific questions. All right.
All right.
Understanding tax extensions. We were just talking about that and key deadlines to avoid additional penalties. Hitting
Yeah,
toward
and I mean, we're at the time of year where we're taking on clients, and as we take on clients, we're just going like, look, you're extending at this point. The deadline's in 2 weeks, S corp deadlines pass, so I don't love extensions. One of my accounting mentors said that when he worked at Arthur Anderson when he was young, they told everybody that the extension meant that the IRS knew you were a sophisticated taxpayer and you were less likely to be audited. And I think they just told people that so that they had more time. But good enough. I mean, ultimately, a lot of times people are waiting on K-1s or waiting on some messy transaction to unwind that takes a little bit longer. And so like an extension can be great, but we try to get things filed on time. We try to just get it going if we can, but we can't always. And so the extension is an extra time to file. It's not extra time to pay. You got to be paid up. You have to pay your extension payment, which is 100% of your 2024 tax in 2 weeks, and they aren't messing around. You got to have it all. And one little trick we do is to try to make the first estimated payment with the extension, just so that you have a buffer. So we just say, hey, pay your 2024 tax extension payment and pay the first quarter payment as the extension. Don't actually make a first quarter payment and then roll over the first quarter payment. The only risk is that you accidentally get a refund somehow, which has happened, and then you got to turn around and like shove that back into the IRS's hand and say, "Look, you shouldn't have sent this to me. We need it applied forward." But ultimately, just buy. I just like things that are simple. I like to be. I say I don't want to overpay the IRS. I don't mind being a quarter ahead, just in case anything happens, so that I'm not always like trying to get the thing postmarked at the last minute. And so ultimately, like we work with our clients to file as soon as we can and file once and file it right.
Yeah, when I joined this company, coming to work with Mitchell, I was like, okay, so I don't love taxes. I've worked my whole life in tech. I don't really want to get into this tax game where everyone's frantic and trying to get everything done by March 15th and April 15th and all these dates and all this craziness. And extensions really have given, I mean, our we use extensions within our client base because it gives us more time, it gives them more time, but it means also we get to file the S corp return alongside of the 1040, which we do a lot because we find our clients, even though we're sending them books and we're all paying attention and we're doing such a great job of keeping everything on track with their books, they come in and look at the end of the year, and then we go to file their return, and they're like, "Oh, I had this other credit card I started in June and I never connected it." And you're like, "Oh, well, okay, let's make
I
sure we get those expenses in." And so if we file
bought that
their
Suburban, right? Yeah,
yeah, and I
or
bought a Suburban and I did all this stuff. Even for the best clients, we still get some of this stuff. So it really we really focus on making sure all the payments are being delivered on time. And with that, we know, a vast amount and have gotten a lot of our returns almost to the finish line. But we like to make sure that there's still time to make sure all the expenses are in there. Make sure that we're not just sitting there breathing down our clients' necks, saying, "Hey, did you look at this again? Did you look at this again?" With this sort of crazy deadline that. So we work throughout
Yeah.
the summer. We talk about tax season. April 15th is not our deadline because we work all summer long to make sure that we're hitting our deadlines for our clients. And that we have a little bit more time to make sure we're not missing anything. We can be super thorough. If there are retirement contributions that are needed, make sure that there's nothing that's being overlooked. And that way, maybe you have a really busy Q1 at work and you don't have time to look at expenses or whatnot. So it's a good tool, but you do have to make sure that you're paying everything by April 15th. I'll say that 13 times because you don't want to get any late payments. April 15th is still the date. You got to still pay even if you're extended.
Yep.
So reminder of key dates. So if you have extended, you have till September 15th for partnerships and S corps, October 15th for C corps and personal 1040s. So you have a little bit of time. If you haven't extended for your personal return, you still can and you should if you're not going to be ready. And even if you are, but you think there might be something that's a little behind, it doesn't hurt.
If you're way behind and you've done nothing since October of a couple of years ago, and you need us to catch you up and get you caught up and get an extension hammered out for you and get you going, we can still help you do that.
We got you.
Email hello@betterbookkeeping.com, subject line I need help, and
Yeah.
we'll get you caught up.
So yeah, this is Mitchell's kind of already gone through our last I think it's our last slide, but we there's a lot of things you can still do and we want to make sure that we can so if you need any help doing them, we're here taking on clients, but even if you're not ready to work with better bookkeeping, just keep some of these big things in mind and know the dates that are ahead of you because there's just easy like totally easy things you can do that don't require a lot of effort, but will make sure that you're not in trouble in the long run. And so just extend if you haven't, and if you need any help, you know where to find us. So here's a link to, we have a 50% off set of fees for webinar attendees. Reach out if you have any questions. We're right at time, but if there are any other questions or anything that you guys have, feel free to put them in the chat. But otherwise, really, thank you guys for sticking around. Hopefully this was helpful.